Okay, let's unpack this. You might think complex algorithmic bots or mastering technical analysis are the biggest hurdles to Forex and CFD trading.
Right, or like reading those crazy macroeconomic charts.
Exactly. But honestly, the real reason most new traders fail to launch has nothing to do with trading at all. It's literally just getting past the front door. So today's deep dive is taking a hard look at trading requirements to uncover where the bottleneck actually sits.
Yeah, and that front door is, well, it's heavily guarded. I mean, before you ever see a live chart, you have to navigate this maze of jurisdictional regulations, identity verification, funding constraints, and platform selection.
Which sounds purely procedural, right?
It does, yeah. But this initial friction is where the vast majority of applications just simply die.
So let's talk about that friction. It's a lot like trying to get into an exclusive club. You'd think access requires knowing some secret handshake, which in our world would be a winning trading strategy.
But really, it's just the bouncer heavily scrutinizing your ID.
Right. And at a modern brokerage, this isn't a human bouncer granting you grace. It's an unforgiving algorithm.
Which is why the delays at this stage are like almost entirely self-inflicted. The automated KYC, know your customer systems, they rely heavily on optical character recognition.
Oh, so like scanning the text on your documents.
Exactly. So if a slight shadow falls across the barcode of your utility bill or even a tiny corner of your passport is cropped out of the frame, the algorithm literally cannot read it.
Wow. So it just rejects it.
It instantly kicks your application into a 72-hour manual review queue. The source material is actually very explicit here, saying fast onboarding is realistic, but no check onboarding is just a myth.
Or the classic mismatch, right? Like registering your account as Dave, but uploading a bank statement that says David.
Oh yeah, the system flags that immediately. You really have to treat compliance with the exact same precision you'd apply to setting a stop loss.
So, okay, you get your unshadowed, perfectly matched ID past the digital bouncer. Next is funding. But wait, I want to challenge the conventional wisdom here for a second.
Sure, go ahead.
If you're just testing the waters, isn't finding a broker with a tiny minimum deposit the smartest move? Like if I only put in $100, the absolute worst case scenario is I lose $100. Isn't that infinitely safer than risking 1,000?
It's a very common assumption, but mathematically, it's a massive trap.
Wait, really? How so?
Well, undercapitalization creates intense psychological and mechanical pressure. Think of leverage like a heavy, high-powered magnifying glass. Yes, it focuses your tiny $100 deposit enough to start a fire, like to open a standard lot.
But if your hand shakes even a millimeter, you burn your own account down.
Precisely. Because routine, everyday price volatility suddenly represents a massive percentage of your available margin.
Right, so when you trade with pennies, you're practically forced to use maximum leverage just to see any meaningful returns.
Yeah, and leverage is just a feature. It reduces the margin required to open a position, but it severely magnifies your exposure to losses. A tiny account simply lacks the structural cushion to absorb normal market breathing.
Triggering catastrophic margin calls on what would otherwise be just a harmless dip.
Exactly. It turns normal volatility into a margin issue.
So even if you bring enough capital to avoid that margin trap, where are you actually putting that money to work? Like you're verified and funded, but you still need an environment.
Right, the trading platform. And the good news is you don't need some multi-screen Bloomberg terminal-style trading desk to succeed.
Oh, thank goodness.
Yeah, you just need pure reliability. The baseline is a stable connection and a proven battle-tested platform like MT4, MT5, or cTrader.
And brokers like Monaxa appeal to a lot of traders because they strip away the bloat, right? Offering these familiar platforms without adding proprietary complexity to the onboarding process.
Spot on. They keep the environment straightforward.
So what does this all mean? It means you have to match your account setup to your actual mechanical goals.
Yeah, if you plan to rely on specific social features or copy trading integrations, you need an infrastructure that natively supports those from day one. You shouldn't compromise your workspace just to chase a broker with a lower barrier to entry.
Makes sense. So a frictionless start requires exact documents, payment methods in your own legal name, and realistic capital expectations.
Exactly. So you aren't backed into a corner of oversized risk right out of the gate.
It really is all about setting the stage correctly before the curtain even goes up. But here is a final provocative thought to chew on before we wrap.
Let's hear it.
If brokers apply such intense, uncompromising, algorithmic scrutiny To verify your identity and your funds on the way in, how might those exact same security protocols impact the friction and speed of withdrawing your profits later on?
Oh, wow. Yeah, that is a critical dynamic to consider for anyone planning to eventually take money out of the ecosystem.
Definitely something to investigate on your own. Well, thank you for joining us for this custom-tailored deep dive. We'll catch you next time.